formed a company called CoinVault ATM, started this project in fourth quarter 2013, launched the first Bitcoin ATM, according to the record books in North America, fully compliant, registered under the United States Department of Treasury's Financial Crimes Enforcement Network guidelines and the Bank Secrecy Act, which sometimes seems to be a little challenging because you're looking at laws that were started in, according to the banking laws, were 1864, and here we are, fast forward, and how do you take that legal framework and try to apply it in this technology? So it's my honor and pleasure to participate today in this conversation, having been, how do I want to say it, audited is a nice way to say, under the guidance of FinCEN after launching the company a year or so into it. And so it's very interesting how the regulatory framework, being undefined, is attempting to be defined in this new frontier. Thank you.
Thank you. My name is Robert Long. I'm a partner at Bell Nunley in Dallas. I'm a lawyer. I previously worked at the U.S. Securities and Exchange Commission in total for probably about 10 years. I'm also a former assistant U.S. attorney. I practiced there at the U.S. Attorney's Office in Phoenix and also as a special assistant U.S. attorney in Dallas. I also worked at FINRA, which regulates broker-dealers and persons associated with broker-dealers. So thank you for having me today.
Hi everyone, my name is Daniel Winters and my firm is Global Tax Accountants. We provide cryptocurrency tax and accounting services to anyone in the crypto space. I'm really excited to be invited here for the second time by Paul. I was here back in March 2015, at which point the price of Bitcoin is $258. It's going up a bit since then. I'm excited about that myself, and we're going to talk regulation.
Good morning, everyone. My name is Jason Seibert. I am a former data engineer with the United States Air Force. Also worked for a few phone companies. Got tired of providing alternative adult entertainment to the world, and decided I wanted to do something useful, so I became a lawyer. So I focused on securities regulations in the height of the subprime meltdown, and as a result ended up defending Trent and Shavers in the first case the SEC brought, which was SEC v. Shavers. And actually, Mr. Long and I were chatting prior to that. It turns out we were actually on opposite sides of the table for that case, or at least some of the people that he used to work with were on opposite sides of the table. And we were just chatting about the current environment with the SEC, and it's nice to have Mr. Long here because I think we can both really talk about the perspective of what the regulators want, what their goal is, what they're limited to, and then how we can, in this environment, try to address clients' concerns. I know for my part, maybe for you, I've been advising multiple ICOs over the last couple of months, as well as defending a few folks in front of the SEC at this point presently. And it's a challenging environment, to be sure. Yeah.
Okay, so I'm going to moderate here from the floor. And what we want to really do to begin with is we want to do a topic selection. And so what I'm going to ask the panelists to do is identify, in a sentence, what you believe is the most significant regulatory challenge that the Bitcoin space and cryptocurrency space is facing. You don't get to provide double topics.
One sentence.
One topic, okay? One topic. So we're going to do a sweep, so the microphone will go this way, and then it'll go that way, and it'll go this way.
I would say the number one topic that the cryptocurrency space is facing right now is the decision to either comply or not comply with regulation.
Okay. So compliance will be topic one.
Related, as a tax practitioner, the number one issue in the Bitcoin space is that Bitcoin income is taxable income. Some people aren't too compliant about this. The IRS has a very bad attitude about Bitcoin. They have difficulty accepting it as a legitimate payment system. So the number one issue I see is, again, compliance and an unfriendly regulator, but we have obligations.
Okay, so can we summarize that as IRS and reporting?
You could summarize it as, okay, we need to file taxes on this stuff.
Okay.
Because
so-
the IRS said so.
So, well, it
Compliance.
is and it isn't because there's more to compliance. Okay, well, go ahead.
Is your ICO a security?
I love it. ICO is it a security?
And from my perspective, it's about the compliance component of AML and KYC. Do we really need to know who you are?
Okay, so KYC, AML. Now, does the audience have a topic that you came here that you hoped these guys would address that isn't one of this on this list?
So I guess my question is really about SAFT and ICO, and how do you guys discuss when you talk to companies about these two? Thank you.
How do you summarize that topic?
So for any company that's trying to raise money, what should they be looking at from a compliance standpoint?
Okay, so raising money in this space might be the ICOs, but it sounds like it might be even a little broader with VCs and seed money and some of those things. So we'll try to talk about raising money and regulations.
When mom and pop get involved, if they lose money, which regulator will react, FINRA or the IRS?
Is that a topic you guys understand?
Yeah, that would be under enforcement.
Oh, okay, so enforcement.
Versus compliance, that would be enforcement.
Okay, so we'll put enforcement on our list. By the way, guys, y'all are going to have to keep me honest because my stack, if you're a programmer, is 3 elements deep. So we'll try to go through this. Keep me honest.
System D, which is the informal economy, is about 1/3 of the GDP worldwide and growing. With governments talking openly about eliminating cash, how are cryptocurrencies, where are they going to serve when governments are trying to eliminate cash?
Okay, cash as cryptocurrency is an alternative to cash. Is that a reasonable topic for you guys?
Yes.
Okay. And you had one? Okay. All right. I'm going to cut it off there because my stack really isn't any deeper than this. So why don't we talk about compliance real quick? Now in compliance, you wanted to. Well, I'm going to let you guys riff. Compliance is the topic. Go ahead.
Okay, so compliance I get to speak on from a perspective that we did go through an audit. And when FinCEN has authority issued to the IRS, they get to come in and look at everything that we're doing operating a Bitcoin ATM. So the backstory is that when we started this company, I made it very clear when I saw Charlie Schramm being picked up in the New York airport, I was not going to be complicit in money laundering or any of the other matters that were the allegations of his charges. So I made the executive decision that we would do everything fully compliant before we generated $1, which means full KYC. And some people were very apprehensive about using the Coin Vault ATM that had a biometric component to it, which required a palm vein scan, because that's ultimately full KYC, knowing who you are. So from the compliance perspective, it was just simply a matter of maintaining the records, who you are, and the transactions that you did. And yes, we are dealing with a complex subject matter because is it a currency, is it a commodity? And so in that regard, we have to be compliant. I can afford 3 meals in a cot, don't need the government providing one. So we know who you are, and we know how much business you do with us. How you move your Bitcoin or whatever other virtual asset you may be able to trade across a Coin Vault ATM is your responsibility. We trade only on our own behalf. And what that means is we launched in an area at a time when there was no regulatory framework. The Texas Department of Banking and Regulatory Affairs passed Ruling 1037 in April 2014. We had the privilege to present the Coin Vault ATM at the Texas Bitcoin Conference in March of 2014. So we launched in this new frontier with no guidance. So from the compliance perspective, I would say as an operator in the space in which we operate, the key is you got to know who your customer is. You can't be complicit with money laundering, and make sure that you're not participating in any counterterrorism financing.
All right.
Yeah, so I think obviously from the FinCEN perspective, a real focus needs to be on whether or not somebody's operating as in a money transmitter. If they're a money transmitter or a money services business, they're going to have to be properly licensed, and usually that involves licensing both at the federal level and at the state, depending on the situation in the state of Texas. You may not necessarily have to be, but there's a whole host of compliance and Bank Secrecy Act regulations and anti-money laundering provisions that are required if you're going to operate as a money services business or a money transmitter. So in some situations where you're doing a Bitcoin business or you're going to be an entity that's going to be exchanging currencies, that's pretty obvious. But there are people that have been, I would say, criminally prosecuted in the past who have been acting as unlicensed money transmitters by simply posting Bitcoins for sale and selling them through different forums. So that's definitely an area to be very cautious with, and something from a compliance perspective, I think you got to look at whether or not you're a business. If so, you've got to have the full anti-money laundering provisions and compliance programs in place, and be very careful in your activities to make sure you don't fall into that arena.
Well, that explanation, I want him to Robert to dig down on that just a little bit. If someone, Bitcoin is largely considered a commodity at this point.
Depending on, it's certainly a virtual.
Well, let Robert answer. He's got the mic.
Sure. So depending on exactly what kind of the product is or what it looks like, it's either going to be a commodity, which the CFTC has said it is, and it could also be, obviously, a virtual currency as defined by FinCEN.
Okay,
and potentially a security.
Well, actually, they've refused any definition. They refuse to define it. They define it as having value.
Okay.
Right? Because that's what Jennifer has said numerous times when they're asked, is this a currency or is this a...
It's a virtual currency is what it's
Yeah, they'll say
called,
that, but is that a currency or is that a commodity? She'll say, that's not, I can't make that determination.
Sure. So FinCEN makes a distinction between a virtual currency and a real currency, and they say that it's not a real currency, but they do call it a virtual currency.
Okay. Well, the observation here that I think I will drill down just one step further, Bitcoin is often accused of being non-regulated, but it in fact is regulated as if it were a commodity, and it's regulated as if it were a currency. So it actually has more regulation than a lot of other things. Is that not true?
The guidance right now is starting to come out. So I think there was a time maybe where there wasn't that regulatory environment, but with FinCEN, the CFTC, and now even the SEC, there are a whole host of regulators out there basically looking at these issues and regulating the area.
Right. So is there anything else that you can think of that falls under all of these categories, and you have to include the IRS too?
Sure.
So is there anything else that's regulated like that?
Not that I can think of.
Okay. So I think the conclusion that the panel should, I'm putting words in their mouth, is that we're actually in cryptocurrency more regulated, not less regulated, despite what you hear commonly in the media. Fair enough?
I think it's definitely highly regulated. I would say the issue is that this regulation doesn't have deep roots.
Right.
So there's a lot of questions, and I think a lot of concerns that people and businesses have because they want to comply.
Exactly.
But they're not really sure how to yet. And I think the regulators are still in the process of figuring that out as well.
Exactly. Well, Daniel, you had a whole lot of things to say.
Hi, thanks a lot. So just kind of first speaking to commodity versus currency versus property. Okay, and
and you're staying on the compliance topic.
I'm staying on the compliance side. So FinCEN came out with the first regulatory guidance on stating that Bitcoin is a convertible virtual currency. Let's skip over convertible, because basically if you have a coin and you can trade it and it's on exchange, it's convertible. So never mind, they're all convertible virtual currencies. So Bitcoin is a virtual currency. A couple of years later, the IRS issued a notice saying that Bitcoin is property, and that therefore they had a FAQ where they laid out a few basic situations, mining, this is property. Yes, you have to do file 1099s on this and several other things, but all we have is a short notice, and it's the notice also said, anything not addressed here, please see the U.S. tax code. Okay, so it's thin. It's a 5-page FAQ. Okay, now as far as commodity, and I'm not splitting hairs, but the CFTC said we regulate Bitcoin if the Bitcoin was part of a derivative transaction, not, and therefore it's a commodity for our purposes if it's part of a derivatives transaction, futures contract or something like that. Thankfully, I don't really need to deal with that kind of thing. So I just wanted to, emphasize the difference that Bitcoin is a commodity under CFTC, but for the IRS purposes, it's a type of property.
Is property a commodity, or is it different in some significant way?
It's just a different regulatory. I mean, look, I'm not the CFTC expert. I'm a tax
Well, I'm
guy.
thinking more on the IRS side.
All it really means to me is I need to know how much you paid for it and what you sold.
Okay.
What you sold it for.
All right.
That's it.
Very good.
So I think we could all agree that the traditional psychology, the cryptocurrency space, is anti-regulation. Yes? It's okay. You can speak out. There's no test. You can respond. It's all right. There we go. Yeah, we even had a raised fist. Very good. So when I said the decision to comply or not to comply, what we're talking about, and when I advise my clients, is you have to structure or understand within their application, within their environment, within their ecosystem that they're trying to build, is the agreement of the parties that are working, do they want to comply or not to comply with whatever regulatory regime they are subject to? So you have an ICO. Listen, you're calling it one letter off of a traditional securities offering to begin with, and you're going to try to tell me that you're not selling a security? Listen, I'm a fraud lawyer. I can smell a lie like a fart in a church, okay? Do not lie to me. Be honest with yourselves right from the beginning. And the point is, if I know what you want to do and you're honest with what you want to do, we can come up with the best strategy to be able to implement what you want to do within the current regulatory environment. Because you can say it's not regulated, but you are regulated. Whatever regime you're going to be in, whatever agency wants to impose their power upon you, they are going to define their rules, which they make in order to have that power over you. So the job is, when you're trying to get your system going, when you're getting your application off the ground, when you think you have an app token, do you want to comply or not comply? And then we work it out. Some people think, no, I don't want to be in the United States because I don't want to be subject to their regulation. Oh, okay. Well, now you're cutting out a huge pool of money. So if you can make $50 million off of your ICO and it costs you $500,000 to make that $50 million, do you want to comply now?
I mean, it's
Anyone?
a good question.
Right?
Yeah, yeah.
It's called the cost of doing business. So from a game theory standpoint, if you're saying, no, I don't want $50 million, I'd rather have $3 million from some other market because I don't want to comply, great. You've just lost, what, $46,500,000?
Yeah.
Okay, that's your business decision. So when you talk about do you comply or not comply, you have to analyze whether or not it's in your best interest to comply with that regulatory scheme. So I approach this stuff when I advise my clients in ICO phases. What's your game theory? What's your strategy? And then let's figure that out. People that want to do app tokens and they think it's an app token, and you're paying yourself or you're doing bonus structures with your app token, with your tote bag, right? You've moved out of app token world, right? You need to think about these right from the beginning of what you're doing, to the extent of your secondary question was, is my ICO a security or not?
Okay,
right?
let's go ahead
Yeah.
and we'll roll right into that. When is your ICO a security? And yeah, we can hand this to Rob. Yeah, go ahead.
A couple little points which I think are, very good, identifying the difference between an ICO and an IPO. When the SEC looks at these, they're not going to get caught up in the semantics or the fact that it says coin. they're going to look at the mechanics of what's really going on. They're going to look at the substance, and that's what's going to define whether or not it's a security and whether or not it has to be registered. The other thing is kind of talking about theoretically, look, we're going to exclude kind of the U.S. in addition to the cost of business that's going to cost you potentially with not having access to people in the United States. That now means that you've got to actually police that, because I can tell you, if you think you're excluding U.S. investors and you're really not, and they are investing in, even if maybe they're not telling you the truth or there's some mechanics about kind of IP address, you still have potential exposure because U.S. investors could have invested.
So this has been the question that I've been saying for about 2 years now when talking about ICOs or ITOs or whatever it's been. And I've been trying to explain via my pro bono work that I've been doing because I was retired and I wanted to give back to the cryptocurrency community by trying to explain how new startup companies could comply or could follow securities regulations. And the point of doing that from a philanthropic standpoint is that I believe in the cryptocurrency community, and I didn't want one company trying to sit there and say, oh, no, we're not a security, and then they go and they screw up the argument, and that creates the low-hanging fruit for the SEC to be able to establish the basic precedent to say you are now the model example. So by doing the show that I did or telling people or giving my services away for free, the whole point was let me explain to you what a security is in a way that you can understand it so you build your ICO on a platform that is not violating the securities laws, or you can say, yes, I am going to be a security, and then you can go and comply. Now, the basic way that I tried to explain this, and I did some free blog posts on it with Reggie Middleton's Boom Bust blog,
Okay.
was the more you are a product, you are not a security, right? Because if I'm selling salsa out of my garage, I'm in the business of being in business, okay? If I am asking for a 90-day or a 6-month loan from grandma and grandpa, and I say, grandma and grandpa, can I have $10,000 in 6 months? I'm going to give you back your $10,000 plus $200 interest on top of it. Now you've crossed into a potential investment contract, giving a money, management, and control of others under the expectation of a profit. Now, there's certain exceptions to registration of how many times you do that, et cetera. And the rubric is, if you're in the business of taking people's money, now you're getting into a regulated environment. If you're in the business of selling salsa, you're in the business of being in business. If you're in the business of taking other people's money, now a regulator says we need to protect those people. That's a basic way that you can look at it when you're analyzing the scenario. So in an ICO world, are you in the business of selling a product, or are you in the business of taking people's money? Come on, call it out. Taking people's money, right? It can be both, but if it's both, you're selling a security. You have to prepare for that. Yes, sir.
Wait, 1 sec. Oh, wait.
So let's say that I'm trying to start a company, and normally I might go ahead and do a Kickstarter. Maybe I'm doing a physical product I'm going to deliver, but it's Bitcoin related.
Sure.
So I want to allow people to decide, well, maybe I don't want to buy this product at some point. Maybe I lose confidence in the company delivering, or I no longer need this product. How about I provide them the ability, when they buy the product, to essentially exchange their value that they've given me for tokens that they can sell to somebody else before the product comes out. Now it's sort of a security and sort of a product. And so the question is it legal, or is it regulated if you give someone something that they can exchange for some future value for a product that they've already committed to purchase?
You're talking about a safety token.
Yes.
And within that, a pre-sale of a product that you plan to launch, okay, is perfectly fine. You're pre-selling your product. But you can quickly cross over that line. When you pre-sell that product and you say, oh, by the way, I'm pre-selling this product and it's going to be pumping on Poloniex next week. Now you've crossed into the investment contract phase. SEC v. Glenn Turner is a perfect case to look at for that. If you ask Glenn Turner what he was doing, he'd say, I'm selling tapes. Okay? Everybody familiar with SEC v. Glenn Turner? Yes. No? Yes? Yes?
Well,
yes.
there's a lot of people that aren't, including me.
Glenn Turner was the fake it till you make it guy, right? And he used to say, if a short, fat guy with a lisp can be successful, so can you. And he'd do these tent revivals where he'd sell motivational tapes.
Oh, okay.
All right? And so you could buy tape product 1, tape product 2, et cetera. And this is what people are calling their application tokens, basically. I relate it to the SEC v. Glenn Turner tapes. Package 3 said not only do you get tapes, but you can invite somebody to our, motivational program, and if they buy tapes, we'll give you a piece of the profit. Mr. Long, can you do a Howie analysis of that for me, please?
Basically, look, the Howie test has got 4 factors. So is there an investment of money? Number one. So is somebody putting money in? If they're putting money in, then check. Is the money going into a common enterprise? So are there other people that are putting their money into that? Is it getting pooled together? Are there kind of potential risks and rewards linked, the other people in there? And then the third factor would be, is there a reasonable expectation of profit? So are they expecting to make money, that they're going to basically generate a profit off of this, or at some point down the road, they're going to make some money, or there's an upside to it. And it doesn't have to be the sole reason. We'll talk maybe a little bit later about the Dow report and what the SEC said there, but it basically was a part of it was the potential for profit. So just part is a potential for profit. And then is that profit through the managerial efforts of others? So is it relied on that the investors are going to need these other people to run the business, to run the orange grove, to run the tape facility, whatever it is? Are they dependent on this other person to drill the well, whatever the case may be? Are they dependent on the other person or the promoter basically to potentially receive that profit?
Well,
if you walk through those elements,
yeah,
and
let's
you
be
check them
clear
off.
on that last
Yes.
one. Does the party have to be the party that sold, the party you're depending upon to increase the value has to be the party that sold them the asset or the thing that we're...
It's just, generally speaking, it would be kind of the promoter, but it's the managerial efforts of others. So it doesn't have to be the promoter, it just has to be others. So you're dependent on somebody else to basically generate that potential profit.
Well, is there anything that falls in outside that category, though?
So getting back to SEC v. Glenn Turner.
Well, wait. Because this is a...
You're jumping into minutia.
Oh, no, I'm not, because I'm trying to figure out how anything cannot
You're trying
pass
to get
that fourth
around
part.
being
no,
a security.
No. No,
I deal with this every day, Paul.
Yeah.
Right? Look, there's more than the Howie test. It doesn't
Sure.
stop at the Howie test. There's been 90 years of precedent, plus 150 years prior to that in blue sky law. Right?
Sure.
It's not just the Howie test that you look at. You've got horizontal commonality, vertical commonality. You've got all these subtests and subparts that go along to all of this.
Yeah.
Getting back to SEC v. Glenn Turner for a minute.
Okay.
To go through the Howie test for that. Did the guy give money for tapes?
Yes.
Yes, right? Did he give it to somebody else?
Yes.
Right? Yes. Was the guy going to have any impact on whether or not those tapes got sold to his friend?
No.
No, right? Because Glenn Turner said, bring the guy in to this facility. We're going to do everything, right?
Right.
Okay, management and control of others. And if the guy buys tapes, we're going to give you a piece of it. Expectation of a profit.
Right.
Bing, bang, boom. Security.
Yeah.
I'm just selling tapes. No, you're not. You cross the line at phase 3. And so when you're looking at your ICO, when you're looking at your application, when you're looking at the business that you're doing, the moment you say, oh, and by the way, we're going to put this on this exchange, you've just hit SEC v. Glenn Turner step 3. You're no longer selling an app token that you're going to use as your in-app currency in your new widget app that does whatever it is it's going to do. You've now entered into an expectation of profit because the in-app token is going to be used in some secondary exchange, which you could exchange for later value later, right? But if you're selling a baseball card and you're Topps and you're selling a baseball card with bubble gum, Topps doesn't say, oh, by the way, we're going to facilitate or try to accomplish this secondary baseball trading card market, right? They don't do that. That's a wholly organic secondary exchange that's created by somebody else in a completely different industry that they're completely detached from. So that was the point I was trying to make on, is it an ICO or not? The moment you're using your app token for payment, like with Tezos, it's not a tote bag, they give themselves benefits. The moment you say that it's going to be used on an exchange, it's no longer an app token, you're crossing those lines. To get into more details, you can talk with Mr. Long or myself later, but I don't want to drill too down.
I just wanted to complete the thought with the Kickstarter scenario. So the token would be issued, but it would be to mitigate your losses with very little expectation you'd ever show a profit. So usually what happens is when people start to want to get out of their deal, it's because maybe things have turned south in the development of the product, or maybe it's been superseded by something better. And what the token would do is allow you to sell probably almost definitely at a loss, but not at a zero, where the company may not ever give you anything. So if someone else is willing to give you something for this, maybe you take a 50% haircut, a 75%. It might, instead of in many cases in Kickstarters, essentially the value goes zero.
You're talking about a hedged token in order to avoid a loss. Now, without getting into the specifics, and Mr. Long knows this, the SEC and the courts have ruled that any device that's used, even if there's an expectation of a loss, such that that loss could there be used to protect against losses in order to benefit you, can be determined as an expectation of a profit. So even a loss can be an expectation of a profit in order to form that investment contract. So it gets very specific. Again, that's where you need to work with somebody like Mr. Long or myself in order to look at those very detailed moments within your application of what you're trying to do. Have you crossed into it or not? And every case is very specific.
Hi. A lot of the risks you're talking about are for the people putting on the ICOs. What about us investors who really don't care about any of their problems and just want to make money? You know, I'm just...
Very good question. I'll be happy to answer that one.
That's where I'd like to...
Thank you for bringing us back down to earth. Thanks for bringing us back down to earth. I'm a tax accountant. The attorneys here, bracketing me, they're the ones that are concerned with the expectation of profit. I don't care. And neither are my clients who are doing these investments. So here's the deal. I want to sell a token. I'm looking to raise $5 million. What does it cost? Okay, the ICO model basically flips the usual startup, pattern on its head. When a startup in a normal system, up until pretty recently, startups have no money. They borrow $50,000 or $100 from all their friends. They live on Raymond Pride noodles for a while, okay, and hope that someone is going to give them even more money, usually in the form of some kind of a note, okay, or a venture capitalist puts money in there. They also get a great degree of control. Okay, that's not how it's happening anymore. So I am a blockchain startup, and I'm looking for $5 million in complete control, and I don't want a VC messing around because I think I'm a genius and my shit's going to rule the world. Okay, so what am I going to do? So I use an Ethereum smart contract, and I create a token. Okay, how much did it cost me? Anyone answer this question? How much does it cost to create a token on Ethereum? What's the number? Basically nothing.
Well, actually, to do it after several thefts of millions of dollars, almost anyone with any sanity goes to one of these guys who has expertise in both building the token and creating the sales channel, and that'll cost you around $10,000, $20,000.
Okay, but if you're raising $10 million, you really don't care about 20 grand. Practically speaking, it's zero. So I have tokens that I've created. I'm this startup, and I'm going to sell them. And I get $10 million of Ether in return. Well, guess what happened? I have $10 million of revenue from my brand new company, and I have jack for expenses. So I'm year one of my business. I'm in the United States. Forget about everything outside America. I don't practice outside the U.S. I have a brand new company. I have $10 million of revenues. That's how it works on the company side, okay? I don't care about expectations of profit. I care about the actual profit. So on the investor side, you can buy tokens on any number of platforms. And I'm frankly not that concerned if you bought your token on Ether, Delta, Apollo, your friend, did it to you in a private sale. However you've acquired your coins, okay, you have made an investment in a capital asset. And I couldn't give I'm not that concerned with what you call it. Is it a security? Is it not a security? You invested in a capital asset. What I'm interested in is the dollar value of what you paid. And I don't care what coin you used or what fiat you used to get your tokens. If you paid $10 for a token and 3 years later it goes up to 300 and you sell it, you have $290 of capital gain on that. And that's how it works. It's my world is actual profit and transactions, and what happens at that stage.
If you don't mind, just respond to that too real quick. You know, the discussion about whether or not it's a security is kind of an academic discussion. But from an investor perspective, it is important because if somebody raises capital and it's subsequently determined that that was a securities offering and it wasn't done properly and it was done in violation of the federal securities laws, the SEC can come in and shut it down, and that can have certainly a negative impact on the continuing operation of the coin, the platform, and ultimately potentially the investment significantly. So there is some definite import to kind of the investors out there that are purchasing coins and ICOs to know that these things are being done the right way.
I was hoping you guys might be able to work mining pools into your hypotheticals a little bit.
Say that into the mic because the video won't pick it up.
Mining pools. So let's just run through it, and we'll use Howie.
Really quick, 'cause
So
we're
you
short.
give money to the mining pool, yeah? Right? And it's their algorithm that they're using
that's
to...
that's not the way mining pools work.
Hold on. It's their algorithm that they decide generally on a mining pool whether or not you're going to go to Bitcoin or Ethereum or which one it's going to be pointed at, right? So dependent upon which one is there. Yes, your computer has some effort, but the decision of where to put that effort is not your own in a mining pool.
That's not
So
all
the
of them are
profits
that way,
that are
but some
going
of
to
them.
be
Most of them.
obtained are generally under the management and control of others because you don't have control of your own resources that are doing that. Yes, you're putting forward resources. So we have the giving of money or money's worth, right? So mining effort can be considered money's worth under the management and control of others with the expectation of a profit. Mining pools are a security under that simple platform. Mr. Long?
Your analysis sounds good.
Well, the analysis sounds good, but I haven't seen anybody actually claim that mining pools were a security. Well, they're so pervasive, and there's so many. It would be so difficult to prosecute. I don't.
You know, I mean, obviously there's a whole lot of activity out there, and the regulators, and in particular the SEC, they have limited resources. They don't have a ton of people.
Right.
So they are going to be looking for, you know, the most egregious instances where there's fraud, you know, false statements, misrepresentations, and things like that. Now, that doesn't mean they can't stumble across something and bring an unregistered securities case, but for the most part, they're going to devote a lot of their resources to the more egregious situations.
Well, I appreciate you bringing in enforcement, so go ahead and riff on enforcement as far as. Well, I'm gonna ignore you. I'm sorry, because we should cover enforcement.
Yeah.
Okay, so we are. I'm listening to you. Okay, enforcement.
Yeah. So with respect to, I guess, kind of the enforcement activity, if there's any violations of the federal securities laws, the SEC can bring an enforcement case. It can bring a case against kind of the issuers, the companies, and the individuals that are running the operation or participants in basically the unregistered offering potentially. So it could be, you know, any number of people that could be subject to an SEC investigation in an enforcement action.
Okay, but let me do a little rift in a regulatory panel, because we often talk about the regulations on a business, and we often talk about how those regulations impact us as users of a protocol or investors on the protocol. I have never, in all my years of going to Bitcoin conferences, heard anyone talk about the one party that's the elephant in the room. How do you feel about the poor regulators? How are they supposed to do what they're supposed to do in this cryptocurrency space? What challenges do they face?
I think I've got to hand it off over here. I know somebody's got something to say.
Well,
I'm sure Jason does, but if you will. All right.
Hey, an
I was in the
interception.
way.
Go
The
ahead.
poor regulators, well, all government bodies have their budgets. They've got limits. The IRS has limited staff. So they tend to focus on high-profile things to scare people into enforcement. Why? Because they really don't know what you're doing most of the time with your Bitcoin transactions. U.S.-based Bitcoin virtual currency exchanges don't send 1099 records of your trades back to the IRS, which doesn't absolve you of your legal obligation to report all of it anyway. So I end up basically handling the back office operations.
Well,
for
but
broker
we're
to
worried
do
about the
this.
regulators. What do they feel like?
They don't feel. There is no they.
No, they really want a set of rules. Am I wrong? Okay, let's let Sheldon. He's hardly had a word.
Okay, guys, here's my position. Having had the experience of the regulators sitting across the desk, spending about 90 days tolling through all of the data and all of the records, the reality is that when we finished our audit, I'm very honored to say we came out with a no recommendations report. What does that mean? They found nothing wrong with all of the data in the thousands and thousands and thousands of transactions we did. So to address the issue, the regulators are looking for...
How much do you think that cost them? Because I'm really feeling for the regulators here. They were supposed to bring in money when they audited you.
I couldn't take them to lunch, and I couldn't even offer them a coffee.
Right.
Okay, so you're sitting across the desk, you're spending days and days and days of time with them, and all they're trying to do is trying to digest the data. So at the end of the day, Paul, to address the issue, what are the regulators looking for? They're looking for a company, proud to say, like CoinVault ATM, that defined the guidelines in accordance with the money service business guidelines defined by FinCEN under the United States Department of Treasury. And when this audit was complete, what they asked us for was the opportunity to utilize our compliance guidelines to train their other auditors with.
Okay.
So that's what they're looking for. They're looking for those of us that are pioneers. Each and every one of you in this room today, you're a pioneer. You'll look back at this time 2, 3, 5 years from now, and people will say, wow, how did you realize that this technology was imminent and how it would change the world? And our regulators are looking for the same thing.
Yeah, and so I'm going to summarize what he just said. Yeah, I see. I'm going to summarize what he just said so he has a chance to contradict me, and that is, the regulators come in there and they spend a whole bunch of government money in an audit.
True.
And there's two outcomes. They get to fine you for a bunch of money and thus pay for their effort and set an example and get that return, or it's a training experience.
And I have to agree with you. We provided the ultimate training experience because the irony is we came out with no recommendations while Ripple was being audited shortly before us, and they got fined $700,000 for a $124,000 transaction approximately.
Okay, really, we're out of time, but I'm going to let Robert say one more thing if you have something to say here.
I guess any last questions? I mean, anything that anybody's thinking about real quick?
We're not going to do any questions.
No?
Zero on the wall. It's just you get to say the one thing you would like these guys to walk away with.
You know, look very closely at your ICO if you're engaging in an ICO, and potentially talk to somebody who can help you determine whether or not it's a security. If you're an investor, you need to as well take a very hard look at that particular ICO or the coin and make a determination about whether or not you think this thing is a security, whether or not it's a viable investment, and whether or not you want to put your money in it.
Okay, those are. I want everybody to give a big hand to our regulatory panel. Guys, I want to point out there is absolutely no way we can even scratch the surface of this topic in 40 minutes. Every one of these guys in here can engage you for several hours and to the mutual frustration of all involved. And you are between them and the door, so they can't get away, all right? And you have about 15 minutes to do that. So I want to thank you, but I do have one announcement. We are going to do a ticket pre-sale. This is a promo code TBC 2018, and it's all caps, TBC 2018. You'll get 50% off your $400 ticket for the next 7 days. Okay? Yes, sir. When's that going to be on Poloniex? These tokens will not be available on Poloniex. Buy your token, your ticket at TexasBitcoinConference.com And don't be that guy that isn't here because he forgot to buy it and it got sold out. Okay? 7 days, you get half-price tickets. Thank you very much.
Thank you.